Okay, so welcome to today's session. The financial reporting paper, right? Let me say our focus will be more on the preparation of the financials. The financial accounting paper focuses more on the recording side, right? If you look at the definition of accounting, it says that accounting is the process of recording, classifying, summarizing, analyzing, and interpreting. In fact, after interpreting, you have to communicate to stakeholders. So the financial accounting paper focuses more on the recording side, the classifying, the summarizing. A little bit of the summarizing. Okay. I'm saying a little bit because at the summary stage, that is where we do the trial balance. Balance. And that is where we prepare the financials. Okay. So the financial accounting will focus on getting the trial balance. Then the trial balance will be used in preparing the financial statement. Now, after the financial statement has been prepared, you have to analyze. Okay, that is where ratio analysis comes in, where you try and make meaning. What is the relationship between our sales, our gross profit, our net profit, and all those things? That's analysis. Then, after you are done analyzing, you have to interpret, right? So, after your ratio, you have to do what we call the report. Ratios, you do the computation, then you do the report. So that is where you explain things. Now it is very critical you add the report or the explanation, because the financial statement that you are preparing as an accountant, you are not actually preparing the financial statement for yourself. You are preparing it for stakeholders. And it is key or critical that you have it at the back of your mind that these stakeholders may not have any accounting background. So if you take it to them, gross profit margin, net profit margin, this, that, gearing ratio, this, they may not understand. So you now have to do what? Make sure you explain or you interpret whatever you have done to them for them to what? Understand. So when it comes to the financials, we are looking at our income statement. So income statement. We are looking at income statement, also what the profit or loss. Please remember this, profit or loss, not profit and loss. I know most people say profit and loss. So the balance sheet or what? The statement of financial position. Then we have the cash flow. We have changes in equity. And we have our note. Note. So the account. So that would be like your workings, right? But it's got to the account when you prepare your financial statement. Now, the way we are to present our financials, right, as accountant, you don't just get up and do whatever you want. You think, oh, okay, my income statement or my profit or loss should look like this. It should be like this. No, you have to comply with what we call the accounting standards. Okay, so we have IAS 1, which has been changed to IFRS 18. IFRS 18. But yeah, I think IFRS 18 will start, the implementation will start somewhere in 2028. So we are still using IAS 1. IAS 1 talks about presentation of the financial statement. So our income statement, our balance sheet, our notes, our changes in equity, we will have our guidelines from IAS 1. Now, cash flow statement has its own standard, and that's IS. Sorry, I nearly wrote all this standard. IS 7, statement of cash flow. So how the cash flow should be presented, whether to use the direct method or the indirect method, we will have our guidelines from what? IS 7. As I said, this paper will focus more on what? Preparing the financial statement. So after outlining the statement or what makes up the financial statement as a whole, we have to look at the individual items that falls under this statement. So when we come to our income statement, right, we have our revenue, we have our expenses and all those things. Now, we would also receive guidance or guidelines from the accounting standard relating to each of the items under this statement. So when it comes to revenue, we have IFRS 15 that talks about revenue, how revenue should be recognized and all those things, right? When it comes to expenses, we have standards for them. So if it's an interest, borrowing cost, and all those things, we will look at these standards. Yeah. So one, we will look at the preparation of the financial statement, the items that goes under each of the statement that makes up the financial statement as a whole. Then we will look at explaining the financial statement that has been prepared, right? We do our analysis, we explain, and we take it to our stakeholders. So just as I said, that's for the income statement. With the balance sheet, so we have our assets, we have our PP, right? PP2, we have our guidelines from IS 16, property, plant, and equipment. We have if you have any investment property, IS 40, so investment. We are looking at the things that goes under the balance sheet, right? So investment property. The name goes investment property. So you are looking at land or building. So if you have any land or building, then your go-to standard is IS 40 in terms of how to treat it in your financial statement. We have that of leases, we have that of contingent liabilities, we have that of inventory. Yeah, so this standard is for inventory, IS2. We have that of non-current assets held for sale and discontinued operation. That's like IFRS 5. So non-current assets. Let me just do held for sale. Let me just call it held for sale. Held for sale. Okay. So yeah, let me just end here with the standards. So what it means is that for the purposes of our exams, right, we would look at one, preparation. With the preparation, we will do that of a single entity, and we will do that of what console, or let me say group. So group. So group of companies. Then we will look at the analysis and interpretation. So you hear most people saying console. Yeah, that's for group. And you hear that people saying, oh, publications. That's for single entity. Then we have questions under standards. So you need these standards or the guidelines from these standards to prepare this financial statement. This is around max, okay, maximum max 20 marks. So 20 marks. So that gives you 40. This is also like 20. It is not constant 20. It can be workings 10, report 10, or it can be like 15 or 18, right? But I think the minimum max I've seen under ratios is 15. You can get 20. So let's just do 20 max. Okay. And you have standards. And standards, you have 40 max. And that gives you 100. So if you want to pass, this is how you have to look at the whole paper. You should know how to prepare the financial statement of a single entity, the group. You should know how to do your ratio and your analysis, your reporting, and you should also know the standards. Now, the good news is that I'm also giving you guys the exams tips, okay? From my experience and from what I have seen, I think all these three, they are constant. They are constant. They would always examine you on ratios. So you know you have 20 marks constant. They would always examine you on publication, a single entity, 20 marks. Always, when it comes to a group of companies, 20 marks. So that's 80. Then standards. But standards, we have a lot of them, right? So the exact one standards that will be examined, we can't tell. It means you should know basically like everything, right? You should know almost everything so that you can be able to get all the 40 marks here. My advice to students is that you shouldn't sleep on the standards. The reason being is that standard is 40 marks. You need standard for publications and you need standard for group of companies. So in effect, standard is like indirectly 80 marks. With the exception of your analysis, right? Your ratio and analysis and reporting. Standard is like 80 marks. So it will be very difficult to pass your financial reporting paper without you knowing your standards. And standards can be very easy and it can be very difficult, depending on who you are, your availability to make time to study on your own. In fact, to come to class first and to study on your own, and also to ask questions. Mostly you ask questions after you've gotten the time to study on your own, right? So yeah, this is more or less like the overview of your financial reporting paper.